Hey everyone, this is Dan here, being a health insurance specialist, and open enrollment's about a month and a half away, so a lot of people are going to be switching health insurance plans, and a lot of people are also going to be buying health insurance for the first time on their own. And in one of my previous videos, I talked about how your deductible, your coinsurance, and your max out of pocket were some of the most important things to look at when buying a health insurance plan. So today we're going to take it one step further, go into depth, and explain what these terms actually mean to you. Okay, so a deductible. A deductible for insurance is what you pay up front before the insurance starts kicking in. So it depends on the plan you're choosing. You might have a $3,000, $4,000, $5,000 deductible. So again, that means that's what you have to pay up front before insurance kicks in for things like surgeries, hospital stays, anesthesia, stuff like that. Now, coinsurance. You're going to see coinsurance in forms of 80-20, 70-30, 60-40, but what does that exactly mean? So coinsurance means the health insurance company is going to split the bill with you. So in this example, in an 80-20 coinsurance plan, they're going to pay 80% of the bill, and you're going to be responsible for 20% of the bill after you meet your deductible. Max out of pocket. One of the things that I think is the most important thing in a health insurance plan. Your max out of pocket is the most you could possibly pay if something were to happen to you, and it's really going to protect your finances because, again, that's the most you could possibly pay, whether the bill is $70,000, $700,000, depending what plan you have. Okay? So I actually wrote out a little example. An appendectomy is one of the most common procedures in America. So I'm going to use this to show you how insurance works and how it would pay this specific bill when it comes to your deductible, your coinsurance, and your max out of pocket. So let's say an appendectomy is $35,000 and you haven't reached your deductible, so you're starting from zero. So with health insurance, the cool part about having health insurance, when you stay in network, they have contracted rates with hospitals, doctor's offices, ER room, urgent care. So we have contracted rates with providers. So we get what's called a network discount. So in this example, to give you a round number, let's say the network discount was $15,000, which leaves $20,000 still to be paid for this surgery. Now, you're going to pay your first $4,000 in this example with the plan I showed here. So a $4,000 deductible, which would be your responsibility. So there's still $16,000 that has to be paid. Well, who's going to pay that? The coinsurance is going to kick in now. So after you reach the 4K, the insurance company takes care of 80% of the bill and you pay 20% of the bill. So 20% of $16,000 is $3,200, okay? But again, your max out of pocket is $7,000. So a $4,000 deductible, $7,000 max out of pocket, that means your coinsurance is $3,000 when you add it up. So you're not going to pay this extra $2,000, you've already reached your max out of pocket. So for this specific example, for an appendectomy, you're going to reach your max out of pocket, which is $7,000. Now, as a health insurance agent, there's things you can add to maybe make that lower with little riders and protectors. But again, this is how health insurance works when it comes down to using it for things like surgeries, hospital stays, and really the worst of the worst. So if you guys have any more questions about deductibles, coinsurance, and maxes out of pocket, or you want me to show you a different example, leave a comment below onto what kind of stuff you want to see. Follow me on Facebook, on my YouTube channel, and my Instagram page. I'm going to leave a comment below to see what you guys want to talk about next.